Disclaimer: this video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Cryptocurrency markets are highly volatile and involve substantial risk. Always do your own research and consult a qualified financial advisor before making any investment decisions. Welcome to our weekly Bitcoin and crypto market outlook. Today, we're breaking down the latest price action, institutional flows, and the macroeconomic catalysts that will define the week ahead. We'll cover everything from CoinGlass derivatives to the Fed's next move. Let's start with our weekly market recap. Bitcoin has seen a tentative recovery after a challenging June, currently consolidating around the $63,900 mark. But what's driving this shift in momentum? Bitcoin is tracking a 7.4% gain so far this July, snapping an 8-week outflow streak from spot ETFs. This move has been largely spot-driven as institutional demand begins to stabilize after the June exodus. Ethereum and the broader market have followed suit, with the total crypto market cap hovering near $2.3 trillion. Bitcoin dominance remains steady as the market waits for a definitive breakout. The institutional pulse is quickening. Between July 14th and 16th, US spot ETFs saw $368 million in net inflows, led by BlackRock's IBIT, which now accounts for nearly half of Bitcoin's weekly volatility. While the ETF rebound is encouraging, the overall market sentiment remains one of cautious neutrality. Traders are now looking toward the upcoming Federal Reserve meeting for the next major signal. Moving to our institutional market analysis using the latest CoinGlass data, we're seeing a market heavily influenced by leverage and strategic options positioning. Let's look at the key metrics professionals are watching. The max pain price for the July 31st monthly expiry is clustered between $62,000 and $64,000. This suggests a likely gravitational pull toward this range as market makers hedge their positions. Open interest remains stable, and funding rates have cooled significantly from the peaks of last year. This indicates that current price action is being driven more by spot flows than by over-leveraged retail speculation. Liquidation heatmaps show a heavy concentration of short positions between 65,500 and 66,000. A push through this shelf could trigger a short squeeze, accelerating a move towards 67,000. The macro landscape is dominated by the Federal Reserve. With the next policy meeting on July 28th, markets are pricing in a 70% probability of a hawkish hold under Chair Kevin Warsh. On the regulatory front, all eyes are on the Clarity Act. This bill aims to resolve jurisdictional disputes between the SEC and CFTC, potentially clearing the path for massive institutional adoption. Simultaneously, SEC Chair Paul Atkins has introduced a regulation crypto agenda proposing safe harbors for DeFi projects. This could significantly de-risk the sector for long-term investors. Now let's dive into the technical structure. We'll analyze Bitcoin across multiple time frames to identify the high probability zones for the week ahead. On the weekly time frame, Bitcoin is in a long-term uptrend despite recent volatility. We are currently testing major support near the $60,000 level, which has held firm throughout the month. The daily chart reveals a critical barrier at $65,000, where the 50-day EMA and recent double-top peaks converge. A daily close above this level would signal a significant trend shift. Intraday, the 4-hour chart shows immediate support at 61,400. We're watching for liquidity grabs near the June swing lows if volatility picks up ahead of the Fed meeting. Based on our multi-factor analysis, we expect Bitcoin to trade between $60,000 and $65,500 this week. Volatility is likely to remain moderate until the end of the month. Our base case sees continued consolidation within the max pain range. A bullish breakout targets 67,000, while a bearish breakdown below 60,000 would likely target the $53,000 realized price area. Keep this trader checklist in mind for next week. Monitor the Fed's rhetoric, track daily ETF flow sizes, and stay alert for any Senate news regarding the Clarity Act. These are the needle movers. In summary, Bitcoin is in a high-stakes tug-of-war. Success comes from combining derivatives data with macroeconomic context and disciplined risk management. No single indicator predicts the market with certainty. If you found this analysis valuable, please like, subscribe, and hit the notifications bell. Thank you for watching our weekly Bitcoin market outlook. I'm Ravi Sharma, and I'll see you in the next update.